Hey everyone, welcome to the market review. We have escalation during the weekend. We had that oil depot attack on Iran, looks like hell on earth. We had an attack on Kuwait International Airport storage. We had a salinization plant attack against Iran, which they retaliated a bit earlier today. This is from like an hour ago. We had that drone attack on Dubai airport. So things are looking quite escalating. And the weekend oil was earlier like plus 3, now it's plus 6.7. It doesn't really mean that it will go even higher, but everything points at escalation. There are reports of US service members being called in for deployment, so this suggests heavily that there will be a ground invasion as well, so boots on the ground. Everything is escalation and going towards a negative place here. So this being said, my initial take was that we hit 1 ATR on the yearly for oil. It's very difficult to go higher than this technically without escalation, but unfortunately that escalation is coming um, because the mechanic starts going against you. Weekend market was just like zero point 0.4 down, so not that much. And when we look at Bitcoin, it's also not very down for the weekend. It's basically flat. When we look at this is oil VIX, uh, we see that aside from that event on COVID when prices went negative and caused a huge spike in oil VIX, we are at levels like we are the same level as 2008, 2018. The Russian invasion was here, I think. Yeah, here. So at the same level with VIX as the Russian invasion. Doesn't mean we cannot go higher, but we are getting towards a level where it is very high. So in theory, it should be difficult to go above this level VIX wise, and this means the top is very close to us. But with this type of escalation, it's difficult to evaluate. We can obviously get a fade on Monday. When on last week we also faded, like we had this candle here and it was plus 10 over the weekend and then faded. I would expect the same kind of thing to happen here, like we open, let's say 97 100 and we fade back to 90 to the 1 ATR over the day. We'll see how it plays out. Now, with the technical setup of what we have here, so we have VIX. This is an initiation candle, and this is a very big level, the 30 level for VIX. 30 level VIX implies like a 1.8, 1.9 move on the daily, and SPX has not made this type of move in quite a while. Like we get on Friday, it was 1.3, and this is under the level of the VIX, the level of what VIX implies. But when we go above this level, we go big. So this is the moment where we stop getting this half-assed drops. We start getting 3, 4, 5% days on SPX, and we don't get many of those. We get one or two, maybe three max, and everything stops. But for let's compare to previous events. So we have this one. What followed after we went above 30? Well, a 50% day. Then we went even higher and we faded. We start going down. Once we get a fade candle in VIX, it's over. The craziness is over. But even like comparing this was another 32% and we faded completely. What happened on this one? So this one, the daily candle was faded. So it was 47%. It faded back to plus 15. And then we had a crazy candle. This was like almost 200%. 180%, and then faded to like plus 67. Uh, so as you can see, these are very big candles, and I think this was a 5% move in SPX. Same in other circumstances, like once we go big. Once we go, this was the following candle of the breakout above 30, and it was plus 40% on VIX. This one took a lot longer to resolved. This was March. This was a market crash. That's why it takes longer. I don't think we're getting a market crash, but if we go down, if we continue down here, this we're gonna get a big blowout. So almost certainty on Monday we're gonna gap down, and I think given the bullish scenario, we go down to 6,500. So let me turn off some stuff here. Let me turn it all off. Uh, what I wanted to show is that breadth. What's this? 59.4. Oops, minus 59.4. Okay. So as you can see, we're already super oversold on McLaren oscillator, which suggests that we cannot really go significantly lower without a bounce. Even when it goes crazy, like for example on the COVID crash, basically we go the worst level was here, and we got a very big bounce after we got here. So I think this is very similar to with it as a setup. I mean, we if we push lower, it's not gonna be uh, it's gonna be like two daily drops of minus 3-4%, which actually let me turn back the ATRs. So this is US 500, and we're probably gonna open around here. Wrong. We're probably gonna open around here, and then continue down to 6,500. And if we get back-to-back continuation, this is a 3% move. Let's measure it. 3% move. This is a baseline of what to expect next week as a daily move for VIX. And there are a couple of scenarios. I think we get this move no matter what on Monday. So on Monday, it will be a minus 3% day. The bullish scenario is the VIX fade. So we get this type of candle in VIX, we blow up and go higher, but we get this type of candle in VIX, we fade it and we go lower and the market bounces. So the bullish scenario for VIX is we gap down to here, let's say minus 0.5, 0.6 on the open, we dump horribly and go do a 3% day, and maybe some news comes in, maybe Trump tackles or something like this, and VIX fades, and oil fades. This will be the same with oil. This has to be a sync move. So let's say oil goes to 100 and then oil starts fading because structural reasons and mechanical reasons will prevent it from going higher without some worse escalation. So oil, let's say, opens here, it goes to 100, tries to go above 100, it fails, and then it fades and goes back here. And for VIX, this would be what? We go to 42, the VIX opens around here, it goes to 42.5. This is a big level that we get rejected from and fades and closes around here, let's say. And for VIX, for SPX, like I said, we open around here, let's say. We go to 6,500, and then because VIX fades, we go back and close around here. So this is a hammer candle. It will look, maybe it's green, maybe it's red. Either way, it's gonna have a huge wick at the bottom, and it looks great. The other scenario is the continuation one. Nothing fades. We go down the first part here, but the bounce part disappears, and then we close at 6,500, and we have another 3% day. We go to like 6,300 on Tuesday. Another 3% approximately. And this is it. And we find the bottom here. We are way, 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 way too oversold, and to go significantly lower than this. So this is the bearish scenario forecast, 6,300, and then we bounce. Whether this bounce is the final bounce and we find the bottom here, I don't know. We could just bounce, go to 6,500 again, get rejected, things escalate again, we get ground invasion, and then we go even lower to 6K. This would be this can be a full bottom, and even 6,500 can be a full bottom. We don't know. We'll see how things play out. We'll see how things escalate or don't escalate or de-escalate, and that's it. So this is my prediction. There's still going to be pressure on the US to stop this madness. I saw a very interesting trade on EA that suggests, as you know, EA is going to be bought by the Kushner consortium kind of thing, supported by Arabs. They were supposed to buy at 210 per share, and this was the put butterfly suggesting 175. So I think this will be more like a rumor thing, or the deal will be repriced at 175 per share. If you remember, all the Unity got a huge haircut on this one, you. So Unity was here, it dropped 67% from top to bottom. We had Take Two, which dropped 30%. So I think the Arabs are regretting buying EA for so much money. They want to renegotiate the deal and also send a message to the Trump administration about their investment. And I think EA is the perfect target to do this because any hints at cutting investment in AI would pop the AI bubble. It would be a very negative event. So talking about reducing AI investment is the nuclear option, and they definitely won't do that for the first try. Maybe they do it later. Then anything related to Trump, like let's telling Trump they won't build his fancy hotel or something, would risk retaliation. So EA is sort of like a side deal. It's not that big money wise, and it's an irrelevant company from a macroeconomic perspective, from a geopolitical perspective. So I think they will use it as a warning shot. Maybe they do a rumor, maybe they reprice the deal lower, maybe something else, maybe a full cut of the deal, but a full cut of the deal would probably dump it more, like 50% haircut going back to 100. Minimum would be like 150, then 115 for this low retest or something like that. It would take it much lower than 175, and this is a strategy that targets exactly 175. So I'm guessing either rumor that they're rethinking it, something like this, or they actually repricing it to 175, cutting it down from 210 to 175 because reasons. So the attempts of getting Trump to back down will continue, but it's a religious war done by fanatics, so we don't know. Uh, yeah, I hope it helps you guys understand things a bit more or be prepared for what's happening next week. Have a good one. Bye bye.